But let's go take a look at some of these charts that I think are really, really important. The most important one is this growth to value rotation. So this is the one that I showed you, like a whole stream of charts, right? Every single day I look at this one where it started to come up off the bottom, and January, was it 5th, 4th? Anyway, I've taken pictures of it practically every day. It turned, I believe it was on the 4th or the 5th, and it continues. And this is now the level of resistance. Almost, I think it needs to tag this yellow to really, really be tested. So we haven't had any test except for this itty bitty little one, right? The moving average, itty bitty little one right here. And that was just, you know, a very, very, very short-term pause. But this, I think, is going to get more of a pause. Now, if we digest here, well, let's do this. If this ratio, which is growth value, and it shows we've had a growth rotation of size, right? And I said, this is the January effect. They start buying calls at the end of December. We didn't get the Santa Claus rally. It just definitely was postponed, but we had solid buying from my cumulative volume indicators and my breadth indicators starting on the 4th, 5th time frame. And then we had, the 4th, it was January 4th. And then we had the 6th, which was January, and the market just started taking off from the 6th very, very strongly, right? And it has grown very parabolic in some cases. Well, here is where we're going to get rejected, or we're going to digest and push above. And right now, I think we're going to go more into the scare mode. Anyway, I'm not seeing a confirmation of anything really, really, really high conviction. It's ready to short, except for this chart. I think this is the reason that it got me into this kind of analysis mode of we're going to have a growth rotation and we're going to move higher into this level. We are now there. So now we need to see how it behaves this week with oh my goodness, a flurry of data that's going to be hitting everything from earnings to economic data, right? That is to recession, worries. And for right now, they're not. They're just absolutely betting that the Fed is going to, control demolition and soft landing, no recession risk because labor market's so tight and prices have been getting passed through to consumers, and earnings for whatever reason are sort of kind of holding up. I still say not really, but that's going to be Q2 timeframe. So in the meantime, gold has not, there were two other things. Gold has not fallen back down firmly below that 180. It's been digesting sideways. And semis, let me talk about semis because obviously, but this is really the chart I'm still focused on, is how much of this growth rotation for the January effect, right? Tax loss selling, and then boom, buy them back up. We're coming right back into even. Right? This is literally December pullback, January rally. We're just coming back to even. Or is this a V-shaped? We're going to digest and move even higher. So that's going to be what I'm looking for. And I'm not going to get it today. But that's a lot of your Bitcoin proxies, a lot of your FANG stocks, a lot of your left for dead meme, you name it, high IV. And also mid-cap tech. My goodness, what didn't move down there? What I'm looking for right now, besides, of course, to see what happens with actual data from Fed and Apple and unemployment and all that jazz, is to watch the rotation that has been in earnest in play since about January 5th. And we are closing out the January effect very, very soon. And I think we have just like maybe an inch. We've traveled a few miles, but I think we just have inches left before we really, really get a test of this momentum rotation. In the meantime, all those, the core components, right, of oil and yields and dollar are staying suppressed. That is what helps this market rally basically stay in play. So we could have this dance for another few weeks. And then most specifically, this, I mean, here we are right here at this resistance level. I think we could still have a few more inches higher until we get a real test. So I am definitely still of the opinion that this was a bear market rally, not the beginning of a secular bull market, which I see, oh my God, so many people like, we're going to 5,000, 6,000. I'm like, where do you get that? But anyway, I don't see that yet. We get above here, right? Where we broke down very firmly. This was the November CPI. We're right back up to it. And tomorrow we have another print, which is expected to be very weak. I think, what was I reading? 5.8% year over year, right? It's still well above our norm. And we go on and on about what is clearly expensive still, energy and food and what have you, and shelter. But nonetheless, we could get another outsized reaction where this jumps the shark. And if this jumps the shark, we're going to have more momentum. So we're right up to a pause area for this momentum rally to peter out for sure.